A developer is evaluating an aging office property in a central business district, CBD, where acquiring fresh land is nearly impossible, but demand for premium workspace remains robust. The team's investment memo contrasts building on a previously developed site versus starting on undeveloped land at the periphery. Which term most precisely refers to redevelopment on previously built-up land rather than first-time development on vacant land? Your options are A. Greenfield development, B. Horizontal integration, C. Brownfield redevelopment, D. Market-making investment. And the correct answer is option C. Brownfield redevelopment. A project team argues that the economics of upgrading an old CBD office improve when regulators allow materially higher permissible construction intensity on the same land parcel. They want to label the regulatory metric that specifies allowable built-up area relative to plot area, and that directly drives the feasible scale uplift without buying more land. What is this metric called, commonly expressed as a ratio? Your options are A. Floor Space Index, FSI, B. Capitalization Rate, cap rate, C. Net Operating Income, NOI, D. Weighted Average Lease Expiry, WALE. And the correct answer is option A. Floor Space Index, FSI. An institutional owner is considering whether to demolish and rebuild part of an older office campus to reposition it as a premium asset, expecting steadier rentals once upgraded. The owner wants to justify the decision using the standard valuation notion of value unlocked from improving the asset's income potential and risk profile. Which term most precisely refers to the increase in an asset's value driven by raising its expected cash flows and/or lowering its risk? Your options are A. Sunk cost recovery, B. Operating leverage, C. Dividend yield, D. Value creation. And the correct answer is option D. Value creation. A leasing team notices that occupiers are increasingly rejecting older buildings that lack sustainability features, efficient floor plates, and modern workplace amenities, even when the location is strong. The team wants the standard market phrase for tenants' systematic shift toward better quality assets within the same broad category. What is this phenomenon commonly called? Your options are A. Adverse selection, B. Flight to quality, C. Price skimming, D. Disintermediation. And the correct answer is option B. Flight to quality. A research note segments office stock into quality grades, where the lowest grade typically requires the most extensive repositioning to meet modern occupier expectations. The asset management team wants the label for this lowest quality category in the common grade A grade B grade C classification used in commercial real estate. Which grade is this? Your options are A grade C, B grade A, C Core Plus, D investment grade. And the correct answer is option A grade C. An investor compares two office assets in the same central business district, CBD, an aging building with unstable occupancy, and a redeveloped Grade A building with higher, steadier rentals. The investor wants a single market yield metric that links an asset's annual net operating income, NOI, to its current value to compare pricing across deals. Which metric is being referenced? Your options are A. Internal rate of return, IRR. B. Gross rental yield. C. Capitalization rate, cap rate. D. Debt service coverage ratio, DSCR. And the correct answer is option C. Capitalization rate, cap rate. A developer's finance team is building a pro forma for a redevelopment project and needs an operating cash flow measure before interest, taxes, and depreciation, focusing only on property-level income and routine operating expenses. The team wants to use the standard real estate metric that excludes financing structure effects. What is this metric called? Your options are A. Net operating income, NOI. B. Earnings per share, EPS. C. Free cash flow to equity, FCFE. D. Gross profit. And the correct answer is option A. Net operating income, NOI. A portfolio manager argues that redeveloping mature office assets can improve long-term cash flow stability, which is especially valuable for vehicles that must distribute most of their cash earnings to investors. She refers to a listed structure that owns income-producing real estate and passes through cash distributions under a regulated framework. Which vehicle is she describing? Your options are A. Private equity fund. B. Real estate investment trust, REIT. C. Venture capital fund. D. Sovereign wealth fund. And the correct answer is option B. Real estate investment trust, REIT. A leasing head claims that redeveloped Grade A buildings reduce income volatility not only through higher rentals but by securing longer, more stable leases that lower near-term rollover risk. She wants the standard portfolio metric that summarizes the average remaining lease term across occupied space. What is this metric called? Your options are A. Absorption rate. B. Occupancy ratio. C. Vacancy rate. D. Weighted average lease expiry, WALE. And the correct answer is option D. Weighted average lease expiry, WALE. A redevelopment pitch emphasizes that modern occupiers want better floor efficiency, meaning a larger share of the building's gross built-up area becomes usable or leasable workspace after accounting for cores, shafts, lobbies, and services. The team wants the standard ratio name that captures net usable leasable area as a fraction of gross area. What is it called? Your options are A. Rent escalation ratio. B. Load factor. C. Absorption share. D. Net to gross ratio. And the correct answer is option D. Net to gross ratio.